If you're frustrated with the limitation of TradingView and want to straightforward a strategy using only 2 indicators, you're in the right place. Let's dive into it. First, we'll talk about the indicators. So, head over to the indicators section of the TradingView. Add the first indicator called 200 EMA filtered parabolic SAR, which combines 2 indicators, EMA and parabolic SAR, to guide your trading choices. But before using it in your strategy, it's crucial to adjust it. Now let's get to the key point. With these adjustments, you'll notice that tricky signals, ones that go against the trend, disappears. When the price is above the 200 EMA on the chart, it's a sign of a bullish market, and it's a green light for long trades. And if the price is below the 200 EMA, it's a sign of bearish market, and it's a green light for short trades. But there's more. Sometimes the EMA indicator alone isn't enough to make good decisions. That's where another tool called the 10 indicators in one comes in. It's like having a team of experts helping you out. After adding this tool, make sure to adjust its settings properly. So, how can the 10 indicators in one tool be of help to you? It's all about verifying the signals it guarantees. When it gives a buy signal, this tool only confirms it if all bars in the indicator corresponding to the signal candle are green. To put it simply, various indicators must agree on the buy signal. Similarly, when there is a sell signal on the chart, all bars corresponding to that signal candle must be red to validate the sell signal. It's essential to remember that if even one bar has a different color in any of that buy or sell signals, the signal is rejected. Now, let's piece everything together to establish our trading guidelines. First, let's talk about the long trades. To enter a long trade, we require a long signal to pop up on the chart. Then, we make sure the signal candle is green. After that, we focus on the market being in a bullish trend, which means that the price is above the 200 moving average. Lastly, the 10 indicators in one tool should be entirely green. If a signal satisfies all these conditions, you're in the clear and can contemplate opening a buy position. For managing risk, set your stop loss below the most recent swing low. And when it comes to taking profits, consider a minimum target of 1.5 times your risk amount. And to initiate a short trade, we start by looking for an initial short signal. It's crucial to verify that the signal candle itself is red. Additionally, we need to check if the market is in a bearish trend, which means that the price is trading below the 200 moving average. And moreover, make sure that the 10 indicators in one tool is indicating an entirely bearish status. If a signal meets all these conditions, you can think about opening a short selling position. When it comes to managing risk, set your stop loss above the most recent swing high to protect against the potential losses. As you're taking profits, consider aiming for a minimum target of 1.5 times your risk amount to maintain a favorable risk-to-reward ratio. Now let's get into the analyzing how this strategy performed in the real world. So here's what we found when we put this strategy to the test. We did 100 trades on the Bitcoin chart using the 15-minute time frame, and the strategy came out with a pretty solid 81% win rate. In just 9 weeks, we made a remarkable 121% profit. During those 100 trades, we had 4 wins in a row and 2 losses in a row. Now, if you're serious about checking out one of the best strategies I've ever come up with, you should definitely give this recommended video a watch.